Hey guys, this is Bruce Marshall with Simpler Trading doing the weekly trade recap. And if this market has been driving you nuts with its volatility and back and forth uncertainty, this video is going to help you a lot. So let's jump right in. Right here, we've got the ES, and this since the first of the year, this is 2026 when I'm recording this video. And we've been in this range bound chop. It's been very hard to trade like we did over here. Very different type trading, right? We're not just riding the Mag 7s. This is more of a stock pickers market, and I think this whole year will be a stock pickers market, which has been great. It's been really good. This has been a good year to trade so far. So let's jump right in. So ES, what am I looking at? I'm looking to trade names that are moving, of course, honey badger type names. The sector I want to look at is oil, crude, energy stocks, right? So here's crude. Of course, you saw this big spike last night. Crazy. So one way to play that, we could do the major Chevron, Exxon stuff. We could do the drillers, oil service, Tidewater, kind of things like that. But I found this little company called Scorpio Tankers. Now, Scorpio Tankers is, as the name implies, it's an ancillary company that ships oil and oil products all around the world. Oil tankers, right? They're based in Morocco. Good company. Lower left to upper right. Nice chart. I've been trying to get long here. The sell-off here, we came down right to the 200, and I kind of missed the ultimate entry point right there. And by the time I got on them and ready to pull the trigger, we were already up here, and I said, this is great. But we got earnings coming up out here, so that makes this a little more difficult type play. So let me zoom in. I'll show you what I did. So as you can see down here, if I hover over that, earnings are on February 12th. They were on February 12th. We've already done this trade. I went in on right there on February 11th. Oops, sorry, right there on February 11th. Let me zoom over. If you look down at the very bottom down here, see 211. So on February 11th, the day before earnings, I went in and I bought the stock. And you might say, well, that's kind of crazy. Why you want to buy the stock right before earnings? Well, I had a I'd done enough homework to know that I thought it was going to be a good choice, right? But I'm not crazy, so I came in and I bought a protective put to give me a floor, right? That's step one. This is not cheap, so I came in and I sold a call up here to help offset and pay for the cost of the put. So let me show you what that looks like, and you may know what I'm talking about here. This is just commonly known as a collar. If you have not seen one of these before, and sorry, my drawing pen is on this other monitor over here. I keep looking over. So here's the trade. I did, and I set this up for you for 100 shares, for one contract, 100 shares, right? So I bought 100 shares of Scorpio stock and bought one protective put at 70 strike price, sold a call at 80 strike price. So this is essentially a covered call. Bought the stock, sold the call. That's a covered call, but we inserted a protective put down here. So what that gives you is this floor. And the way to look at this, if you're not familiar with this is Charles Schwab, Think or Swim, and this is the Analyze tab that we're on right here. And this shows you a visual of your trade. It's very cool. So that green line is what happens at expiration on the last day of the trade. The pink line right there, lavender, whatever, shows you what's going on day by day. So if you look over here, and I'll hover my mouse over here, you see that? So at the end of the trade on 418, it expires on 417, and of course the next day is 418. There is $250 of risk on this trade. So I can buy the stock, hold it over earnings, and the max risk I have on the trade is $250. That's pretty cool, right? So if we hover up here, what if we go over 80 by the expiration on the trade? It's $750. So you might not think that sounds like a lot, but it's 3 to 1. We risk 1 to make 3. Risk 250 to make 750. That's good math on any kind of investment, honestly. So, and that's kind of rule of thumb for me. I like to get 3 to 1. I mean, sometimes we can get 5 to 1. Sometimes we get 10 to 1, but it's going to be a little more aggressive, that type thing. This is for your long-term portfolio, your IRA, your retirement money, your safer money. And this is a way to protect it and still allow you to be in the market and do trading in a crazy market, right? So again, we risk 250 here to make 750 up here. Now, depending on, this is an IRA, depending on if you got an IRA or a margin or whatever, that's going to be the cost of the trade, because you got to buy 100 shares of stock. 100 shares at 72.50 is 72.50, right? Now, there's a little cost to the put, but again, we're going to offset that with the call that we're going to sell. So, fast forward, earnings were great. Thing goes up here, it's great. And I did not, this is just the way it worked. This is a live trade. I have a trade room called Bias. I'm going to put a link down, and we do this every day, and I post these every week, so you can see what we're doing. I can show you the type trades and the concept, more importantly, behind everything. But I actually sold it right there. Didn't get the high, but got very, very close. So if I hover over that, it was the 27th. If I hover over that, yeah, so you see down there on the bottom, 227. So we bought it there, and we sold it there. So we got this real nice run, right? And to be fair, I was not expecting this. I was expecting more, like this, to kind of continue this move like that. I didn't think it would move that fast, but that was good in our situation. So go back over here. Now, when I put this trade on, we had 60 days to expiration. Usually I do 30 to 60 days, to give a little time to work. So we had 60 days expiration. We held the trade for 16 days. So there were 44 days left on this trade, right? So at the time, we were up about $360. So the trade is working. It's moved, remember that chart went like this, and I thought it was going to go like that. I thought it would take us this long to get there, but we got there pretty quickly. And so we're up $360. So are we going to stick around for 44 more days and have this money tied up to make an additional 390? We're about halfway there, about almost 50%, 47%. And in my opinion, no, it's not worth it. Whenever you have a trade, if you get 50% of your profit, especially early on in the trade, take it. Go find something else. Take the risk off. Anything can happen. You can give it back. The stock could pull back. Whatever. We could have gone to a loss down here, right? But again, we have a floor on the trade. So took the trade. That was 300. I think it was $360. That works out to be we held it again for 2 weeks. It was 16 days. That's 4.55% on our money, right? Now, if you have a margin account, it's probably going to double that. Probably, I don't know. It would be a lot better because you wouldn't have that much money or margin tied up, right? But 4.5% in a couple of weeks, I'll take that all day long. Lather, rinse, repeat. We do it again and go look for something else, or we wait on this one to pull back and we get back in it. The good thing about this, or the cool thing about the way this works, if we're sitting, there's max profit. If we're sitting anywhere below that $80 call, you don't get called out. You write a covered call, you get called out if it's above 80. If it's below, you keep it. So guess what? If it goes down here, let's just say it goes down here, you're down $250, and you say, well, that didn't work in the time frame for whatever reason it works, or that it was supposed to work, but my risk or my loss is $250. But guess what? You still have the stock. So if you like the stock and you want to hold it and do it again and let it run, you can do it again. You're only out $250. Now, if you're up here and you get to the end of the trade and you're up, say, $400, that's high five, that's money in your pocket. And guess what? You go to May or June and you sell another 80 or 85 and you bring in another $2 or $3 or whatever it is, and you just keep doing it, right? And that's what's called the wagon wheel, basically, strategy. I wrote a book on that a little while back. But anyway, more on that later. But anyway, it's cool. Very, very cool trade, very cool process. You own the stock, so you catch dividends. If it pays a dividend, you do catch the dividends. You have a complete floor down here with max risk, right? So what if we, you might look at this and go, well, I'm trading my IRA's, $750,000, whatever. Okay, $1 million, whatever. Okay, let's do 50 contracts. All right, you're going to risk 12,000 to make 37,500. Pretty cool. And you just let it go, right? And again, if it had a dividend, you would be catching the dividends along the way, etc. So I wanted to show you the concept here, the process, how this works. In a market like this, it's very important to limit your risk. all kind of geopolitical. There's all kind of stuff going on, right? We have Fed meeting coming up, all that kind of stuff. Is inflation going to go up? Is it going to go down? What's interest rates going to do? All that. So think about using strategies that limit your risk. We do these all the time. Join us in the bias room. I walk you through these live with real money. Live. You trade alongside of me, and we had a trading community there. So. Hopefully that helps. Let me know what you think in the comments. If there's something else specifically you want me to cover, let me know. I'll be glad to do a video on it. I do have a video on how to work this Analyze tab. It's pretty cool. A lot of cool stuff on here. So let me know what you think. Again, I'll put links down below for everything. Like and subscribe, of course, to hit the notify bell, because I do these every week. I do trade recap on Tuesday and then new stock ideas on Thursday. So you want to be sure to catch those. So hope that helps. Thanks for the time. I'll talk to you soon. Take care.